call it the MPR or benchmark interest rate. The story is that, as you have seen, it's still at 11.5%. But the bigger picture or the bigger question this morning is, what does that mean? How does that affect you and I, macro, micro, and all of the value chain, as it were? As you've seen, we're joined this morning to take a look at the implications and what this means by Mr. Ayo Teriba, who is the CEO, Economic Associates, is a lecturer, Nigerian University of Technology and Management, Lagos. Is also coordinator, the TWG on Financial Sector and Capital Markets National Development Plans 2021 to 2025, as well as other plans. Is a vice chairman, technical committee of the National Council on Privatization, and he joins us via Zoom from Lagos here in Nigeria. It's good to have you on the program, Mr. Teriba. So a lot of figures, really, listening to the head of the CBN, Mr. Godwin Emefiele, going through the background and all of that. But I wonder for you what you expected, because the factor a lot of people were looking at is inflation. And you see people saying, well, we kept the rates in spite of the rise in inflation. Did you expect it to be tightened, to be loosened, or to be held? What were your expectations?
Right. The variables that the central bank has to consider cannot be limited to inflation at a time of renewed global uncertainty triggered by the invasion of Ukraine. We struggle with growth. We struggle with exchange rates. We struggle with liquidity. And we struggle with inflation. In the order of things, you prioritize exchange rate stability over inflation, because the sort of inflation that we have merely reflects the cost push effects of devaluation and the supply disruptions coming from renewed supply disruptions coming from the war in Ukraine. So I wasn't expecting that the central bank would be claiming to be in any position to do anything about inflation. It's going to, the cost push inflation will, die off on its own in the process of time. If it was demand push, that you'll be talking about the central bank raising rates to affect to reduce inflation. However, you cannot be raising rates when growth remains weak. Neither can you cut rates when you have demand pressures, on the foreign exchange market. What the central bank needs to consider is not to confine itself with several meetings in which it comes to explain why it cannot act, but to take strategic steps to boost the supply of foreign exchange in the country. I think that's the number one challenge, for monetary policy management. And you can't limit yourself to the foreign investment that incremental movements in interest rates can adjust. Sometimes you rely on price, sometimes you rely on, quantity measures. So I do think that we need to encourage the central bank to take the kind of extraordinary measures it has been taking in other spheres of the economy, which it calls interventions. The governor of the central bank was just telling us about the likely interventions that could be required to ease the supply of petroleum products. The committee should consider possible interventions that could boost the wholesale supply of foreign exchange. If they reflect on that, there could be one or two steps that you can take that is going to raise the foreign reserves beyond what the oil price would give the country. The oil price is very unstable. And ironically, now that the price is up, we are challenged on production.
Right.
So we need to look beyond oil and see what buttons Nigeria can press to boost foreign exchange supply.
And that's the question now. If I could just, pardon me, just to follow up on that one about the exchange rate, because it would seem that the CBN has been very cautious over time, retaining these key parameters. And it would seem as though the CBN is just trying to be careful so you don't, tip the cart, as it were. So what are the options available? Because as you said, there are various factors before the CBN. There's growth, there's liquidity, there's inflation, and then the all-important forex. So what are the options available for the CBN, and how hard will it be to take these steps? Because there's also meant to be support from the people in whatever decision the CBN takes. So what are the options available to boost forex, which is a big one?
Right. The central bank macroeconomic policy management requires the central bank to coordinate with the managers of the fiscal side of the economy to ensure that there's harmony in what they're doing. Last week, we had the debt management office coming out to tell us the debt figures for the country and telling us their latest issue in the Eurobonds market. It's all about liquidity. The debt management is about liquidity management. The spending, the federal government borrowing to supplement spending is liquidity management. So if the debt management office could be talking to the country about raising Eurobonds between the central bank, the debt management office, and the Federal Ministry of Finance, they should bring proposals on the table on how we could also raise, for example, instead of bonds, which is debt, equity, looking for foreign direct investment, to come into the country to finance some of the things that we are currently borrowing to do. So Eurobond is debt. Foreign direct investment is equity. Nigeria only issues debt instruments at home and abroad. Nigeria can also issue equity. Some of the assets that you are trying to borrow to fund, you could offer equity ownership. This is a very reliable way, perhaps the most reliable way open to countries around the world to ease liquidity, to boost foreign exchange in their countries and stabilize the exchange rate. Because if the exchange rate is not stable, price will not be stable, growth will be challenged, interest rates will be high, and so on and so forth. So I'm saying that it shouldn't be difficult for the central bank to work in concert with the Ministry of Finance and the Debt Management Office to think of equity offer opportunities. Nigeria owns a lot of assets. We don't have the money to fund them, and yet we insist on owning them 100%. So issue some equity, it could be 5%, it could be 1%, that brings foreign exchange liquidity into the country and helps puts the central bank in a position that it can act. If you are cautious all the time, you don't want to rock the boat all the time, then I'm not sure if that's holding, or I'm not sure how long you have to do that before it begins to look as inaction.
Okay.
Before it starts to look like you are just backing, but when you need actually to buy it.
Well, Dr. Teriba, sometimes, speaking about these macroeconomic issues, sometimes it sounds like we talk above the heads of so many people who are more concerned about their microeconomic issues. And perhaps that's one of the reasons. So there will perhaps be a need for you to help, marry those ones, because so long as people do not have, money to spend, to fund their businesses, ease of doing business, parameters you may have heard, when we were looking at the papers, when one of our paper review guests was talking about the fact that no matter what the ease of doing business reforms that the government may have evolved, so long as there are other issues that are not planned for, or that were not foreseen, such as fuel scarcity, electricity challenges, they will continue to, for want of a better word, mess up the efforts that have been made to reform the ease of doing business parameters of government. So in that wise, what would be your take, especially for that sector of the economy, the micro, small, and medium enterprises that form the bulk of what drives an economy? When the challenges are there, ease of doing business reforms have been taken, on by the agencies, and yet we seem to have some punctures in the tires when we're supposed to be cruising.
Well, now you just use the word punctures in the tires. There are problems that you have to zoom in on and solve them one at a time. You cannot lump everything together. You've mentioned ease of doing business. You've mentioned disruptions to the fuel supply. You've mentioned disruptions to the power supply. You don't have the luxury, painting it all with the same brush. You have to get into the specifics of where the disruptions are coming from and solve them one at a time. So we were talking about, easing monetary policy or bringing inflation under control, providing adequate liquidity. You have to solve that, on its own, and then let the people who run the power sector come and tell us what the challenges are.
But at the end of the day, my apologies, Dr. Teriba, at the end of the day, you and I know that the Nigerian doesn't really have the patience to care who is supposed to solve what. They just want to get to the fuel station and not have to wait for too long. Switch off the power, switch on or off the power, and the switch responds without any challenge. But these challenges have been there for so many years with promises that we're going to do something about it, and it will seem like this is the way it is. So that's why it seems, because at the end of the day, sir, that these are the challenges that people confront every day. Small businesses confront these challenges every day. They try to take them on before they're done dealing with one. Another one rears its head. And they expect that government should be ahead of it, no matter what the challenge.
Well, fuel scarcity is by no means a challenge that we encounter every day. The current one has been protracted. It's been on for maybe 2 months, but we hadn't had it for years before now. So we shouldn't create the impression that it's an everyday problem. Similar, maybe, power disruptions to power supply in parts of the country could be described as closer to everyday challenge. But still, you can't solve all of the problems together. You have to keep zooming in, and looking for what's causing disruptions. Disruptions are experienced all over. Nigeria is not the first country this year to suffer fuel scarcity, and we've even seen developed countries suffer fuel scarcity. So I do not think that, I'm not excusing, the failure of those maybe errors of commission or errors of commission in the past of those who are managing the sector, but we should also refrain from making mountains out of molehills. Efforts are being made to resolve it. The central bank governor has just spoken, about if there are interventions they could make, they will make it. And I think we should also, on our part, exercise some patience in times like this and not begin to create the impression that the problem that's been with us for 2 months has been with us for 20 years.
But don't you think, Doctor, that 2 months don't you think that 2 months is significant enough? I mean, this is off tangent
of some sort,
but so we don't sound insensitive to people who are probably listening to us from the filling stations this morning. And I mean, 2 months, that's quite some time.
It's not insulting anybody if we are encouraging people to be patient, to show understanding on the about the people managing. You can't crucify, the people managing the sector just because some people are queuing at the station. So let's be balanced. Yes, it's not a good situation to be in. It affects all of us. It affects me. Yeah, then we have to still, temper our comments or our reactions, with some moderation.
My
That's my
apology.
point.
I actually asked that question against the backdrop of what you're saying about the economy. Ultimately, no matter what policy issues are raised, so long as there are other things that get in the way that seem to, as you also referenced the other time, puncture the tires, it would seem like the effect is direct. But there's something else that the CBN governor mentioned, when in that briefing. He talked about, one of the policies that government has been working on. He said, and I quote, "If agricultural output in our various products are improved, we will see a further moderation in food inflation, which moderates headline inflation. If these actions are taken, we are reasonably confident that inflation will come down." Are you as optimistic as he is?
Well, there's no optimism about an if and then statement that the central bank governor has made. Is making a conditional statement. If agricultural, output increases, prices will moderate. There is no optimism about that. What if not? Basically, if you be saying that.
Doesn't that also raise a little worry, because inflation figures are not quite friendly? So are you by any chance saying that those conditions that is given do not look as favorable as they sound?
There will always, whatever the situation, there will always be room for improvement. So he's talking about, I'm not a spokesman for the governor of the central bank. He should have looked for a way of interrogating him on his own statement. But I don't see anything that one will disagree with in the statement that he has made. He's saying that improved supply, whether food or non-food items, will ease inflation, and it's difficult to argue with him on that.
All right. So let's break this down even further. I imagine a lot of Nigerians listening to us, off the back of holding the rates 11.5 and other parameters, keeping them, and they're wondering, how do I approach, my small business, my larger than small business, or my personal finances and all of that? The implication of this, this is the second in the year, and some have predicted that this year will be quite tricky. Now we have the Russia-Ukraine situation in our hands, and the projections have gone out of the window. So how should people position themselves at this time? And I hope you can actually go up the ladder, as it were, for individuals, small businesses, and for the bigger companies. Don't forget there's a challenge of inflation, Forex, the energy crisis, insecurity as well. All of these, the CBN actually mentioned, saying, it's a very tricky period we're in right now. So how should people progress?
All right, let's get this clear. The current source of uncertainty in the world is the invasion of Ukraine, or the war that Russia has launched on Ukraine. So we suffer the supply disruptions coming out of that. And it's doubly painful because we have just exited, as it were, a pandemic, that led to disruptions as well. But, okay, the pandemic was global. It was here in Nigeria, like it was in every other country in the world. But this war in Ukraine is not in Nigeria. So it's Ukraine that is in the war. That you can be asking, how should individuals, how should companies, how should cities, our citizens have already, been brought back from Ukraine. And some have escaped to other countries. Now, we are not at war. So don't make it sound as if, the supply disruptions that we are experiencing is a situation of war. We still have peace. And if the people who are facing the war can cope, God forbid that we face a situation as severe as that, then I and you similarly can cope, with this, short-term difficulties in getting fuel or dealing with increased prices in the aftermath of a devaluation or dealing with the hardship imposed by a recession. Not the best of situation, but it's not an extreme situation. We shouldn't make it sound like it's an extreme situation.
No, the question, I don't think you got me right. So this is me actually quoting the statement of the governor of a central bank where he listed these issues, including the Russia-Ukraine war. In fact, the term he used was imported inflation, essentially saying a lot of these things are not really within our realm of control. But the point I'm trying to get to here is to equip businesses. We don't know how long this will last for. A lot of the products we import, we get them from either Russia or Ukraine, and we've seen what that is doing to some businesses here. We had conversations with manufacturers recently where they spoke about this thing. So my question is how people can, coordinate themselves so that they can individually as a business have some buffer. Who knows how long this will take? So we at least are well equipped to handle this properly. So this is essentially trying to get equipping for individuals and business on the back of this recent rate announcement. That's the point I'm trying to make.
That's the role of policy, to help agents, cope with situations. And our point of departure was what could the central bank have done? They held all the policy levers. And I had suggested what they could do, give them room the time and then analyze things up and down and say we held, requires them to put money on the table. So, and I've suggested that rather than looking perpetually at debt, raising debt, the government can raise equity, which you don't pay interest on, which you don't repay, because you have a lot of room for equity issuance. That may sound above the head of some hearers, as Ayo did say, but I wonder, in contrast between debt and equity is not abstract. Okay. So I've suggested where government can find a resource so that they can intervene more and pushing the pains individuals are facing, pushing the pains companies are facing, and pushing the systemic pains that all of us are facing. Basically, that's the long and short of it. Right. And we have to encourage the central bank, not to limit its interventions to fiscal side of things. The foreign exchange shortage pinches more, than the loans they give to relief, unless you are able to get more foreign reserves to ease the foreign exchange pain. And, ease many of the disruptions, that is causing bottlenecks in the system.
Okay. Well, Dr. Tereba, we need to go on a quick break now. Pardon me. So we need to go on a break, but this is what we'll do. We'll come back, and I'll let you land on that point and take on some other issues. People have talked about having some sort of broader interaction with the diaspora world. You talked about getting equity. So can we lean on that, the fiscal angle of things, and the coming days? Because the CBN governor also talked about possible, disruption to food production. So we'll talk about these issues when we return in a moment. So please stay with us. Well, let's continue our conversation with Dr. Ayo Tereba, who is CEO, Economic Associates. He's also Vice Chairman of the Technical Committee of the National Council on Privatization. Now, I specifically mentioned that cap that you wear, the National Council of Privatization, because you talked about this equity offer opportunities. I know a large chunk of a challenge we're facing in recent times has to do with Forex Forex. In fact, you go to the market these days, and the market women will tell you, yes, dollar is expensive. That's why the tomatoes are expensive and all of that. So you can imagine the ripple effects we have. So in terms of this equity offers, how should we go about it? I think I've come across that idea before, but it looks like that's an option we should focus on. So should we lean on our diaspora capital, which we say is vast, or should we go for others outside, that circle? How do you think we should approach this? Because it looks like it might just be a game changer.
Thank you very much. The statement I was making that you said when we return I land on it is, look, even the fuel supply destruction, by the time you check, inadequate foreign exchange, will be one of the issues. Inadequate foreign exchange supply has precipitated devaluation, and it's that devaluation that keeps bringing up fresh need to adjust the pump prices. But you hit the nail on the head when you speak about how to get external liquidity. The quote of the central bank governor that you put up there spoke about fiscal and monetary stimulus. Those two are part of the problem. But the foreign exchange shortage loomed larger than the fiscal and monetary stimulus that we are providing. You announced that you are providing intervention funds of 1 trillion or 2 trillion naira. 1 trillion naira 4 years ago is what twice the value of 1 trillion naira today, just for the simple reason of devaluation. So if the government can work in concert, the fiscal authorities and monetary authorities, to look for what they can do to ease the foreign exchange. Foreign exchange is scarce in Nigeria. It's in surplus globally. Foreign investment is surging, and the countries that are able to get their acts together and bring forth enough offers. The difference between us and the countries that are getting the foreign exchange inflows are that they are making a lot more offers than us, and they are, consummating more foreign investment deals than us. Both in all of the projects that government says we are borrowing to invest in them, we want to do PPP on them. What India and Brazil does is to list all of these projects on a website. And it's open not just to diaspora investors, it's open to domestic investors, it's open to foreign investors, it's open to diaspora investors. That's what we have to do. It will ease our liquidity supply. It will create opportunities for other people to come and use their money to develop all of those sectors. Like we are benefiting, from foreign investment in the LNG plant. It's now going into the 7th trade. We are benefiting from foreign investment in the GSM telephony, more than 160 million lines. Why are we hesitant to open other sectors? These are the things that we have to do as a country, to get liquidity into adequately. Unless we solve the foreign exchange liquidity problems, fiscal stimulus or monetary stimulus will not be.
And I think that's a fine, right.
Yeah.
And I think that's a fine place to leave it. Very instructive ideas that you have submitted. But I'd like to thank you so much for those thoughts on the program this morning. Dr. Ayo Teriba is the CEO, Economic Associates, lecturer at Nigerian University of Technology and Management, Lagos, as well as other caps that he wears. Thank you so much for your time on the program.
Thank you.